Why do most traders and investors lose money? No matter what the market is, the majority of people end up losing money even during a bull market. In this video, we'll go over why this happens and what you can do to protect your wealth and investments. Welcome to DeFi Now, where we give you the knowledge to thrive in the next generation of finance. I'm Josh Cross, and we've got our DeFi dog, Steve Irwin, here on our Irwin cam. Hey, bud. First, I want to thank everyone watching, and especially everyone subscribed for your support. Last week, we hit 50 subscribers, so we're halfway to my first goal on my DeFi Now mead box. If you guys remember this from my earlier video, we've got all my mead that's left over in here, everything you need for quarantine. And on this side, we have the number of subscribers that I need in order to be able to open it up and take 4 bottles out. We got 24 bottles in here total. So with each of these six milestones, we'll be able to take out 4 bottles. So make sure you're subscribed because I really want to drink some more of this. Let's put it back. Okay, it's heavy. You gotta subscribe, guys. Also, I mentioned in my Ivan on Tech Academy video that I would use some of the $250 prize money that I got to take the exam and get my Bitcoin professional certification. It took me a while to get around to it, but last week I finally got my certification in the mail, so I am officially a certified Bitcoin professional. Let's get my certification. As you can see, I got my certification, and you can check the validity of this in the link in the description. All right, let's put this back. Beautiful. Now lastly, before we jump in, I have to drop my quick disclaimer. As always, the knowledge I share on this channel is only for your own information to use in your own research, and it is not financial advice. Don't trust anyone online, even me. It's up to you to make your own decisions or seek advice from a licensed financial advisor. Don't give me credit if you make money, and don't blame me if you lose it. Now let's jump in. When we first hear about crypto, almost everyone has a very similar experience. First, we ignore it. Then we think it's either interesting or a scam, but either way, it'll never expand beyond where it is right now. In fact, it'll probably come crumbling down on its own or be shut down by governments. So we ignore it again for a few months or years until we hear everyone buzzing about it later, when the price has increased dramatically and it's surpassing all-time highs. Then we regret not buying it earlier, and we jump on CNBC or YouTube to see how we can buy some. So we create a Coinbase account, we go through the identity verification, we link our bank account to it, we wait 5 to 7 painful business days for the wire transfer to go through, we watch hours of videos on all these amazing projects that will go 100x and go to the moon, and then we can finally buy some. But the price has gone up multiple times since we started a week ago. We get so excited and can't wait to jump on the train, so we invest as much as we can, as fast as we can, knowing in a few short weeks we'll be rich. We think of all the amazing things we can buy, how great it will feel to be financially free. We can travel and never have to work again, buy a Lamborghini for our mansion, go to the moon. We think about how people will look at us when they see how quickly we got so rich. Some of us even take out credit cards or refinance our mortgages and dump everything we can into this wild internet money. We buy whatever we can get our hands on. We buy Bitcoin, Ethereum, XRP, a bunch of other coins with Bitcoin in their name, Bitcoin Cash, Bitcoin SV, Litecoin, Bitcoin Gold, Bitcoin Diamond, and to top it off, a bunch of tiny altcoins that we heard will explode from a YouTube video we watched. Then we check the price every chance we get. This is crazy. My portfolio went up 30% in a day. This is what euphoria feels like. I'm a genius. I'm gonna start day trading so I can make even more money on it. I'll be able to retire in no time. But then my portfolio just dipped 30% in 5 hours. It's only a dip, so I'm gonna buy more since everything is discounted. Then the price starts going up again, but it doesn't quite reach where I first bought it. That's fine. We just need to cool off a bit before we can go higher. But then the price dumps further. Now I'm 40% down from where I bought. I'm feeling pretty anxious. I just need to hold out a bit longer. Then it dips further, 65% down. I haven't slept for 3 weeks. They said to hold, but they never said this would happen. It just keeps going down. Everyone is selling. I can't sell now. I've lost 80% of what I put in. They lied to me. I knew this whole industry was a scam. 90% down. That's it. I'm selling everything. I can't afford to lose anymore. How am I going to get to recover from this? I can't afford to pay these credit card bills now. My wife won't speak to me. What will my family think of me? Sadly, this is the mistake most people make and why they lose money in investing. This is an extreme example, of course, but it can happen. The most successful investors and traders are calculated, methodical, they manage their risk, and they don't give in to their emotions. But for most people, our biggest enemy in the markets are ourselves. We humans are highly emotional creatures. Instead of buying low and selling high, instead of following Warren Buffett's advice and being greedy when others are fearful, and fearful when others are greedy, buying when there's blood in the streets, we do the opposite. We buy high and we sell low. What I just described in the first section is the psychology of market cycles. It's well known that missing out and watching the price skyrocket is more psychologically painful than buying into a project and losing everything. That's why the fear of missing out is so powerful. FOMO is no joke. We always want to buy assets at lower prices and sell them at a higher price. But when it comes time to click those buy or sell buttons, things get a little tricky. The reason why is because if the price has been increasing, we will assume it will continue to increase. And then the same goes when there's a pullback and the price goes down. We assume it will keep going down. We see a crypto whose price has doubled in a week and think, hey, that's a good investment. But a crypto who has lost 30% in a week is a bad investment. Otherwise, why would people be buying or selling them? Generally speaking, when you buy a cryptocurrency, you think the price will increase. And when you sell, you think it will decrease. It's important to remember that there are two people involved in every trade. So when you buy, why is the other person selling it? And when you want to sell, why is the other person buying? Only one of you is right. So before you make your move, make sure you're the one who's right and make sure it fits into your strategy. And if you don't have a strategy, don't buy anything until you do that first. It's very difficult to avoid being emotional when money is involved. So in order to do so, I'm going to share some of the best practices I have learned with hopes that they will help you avoid the fear of missing out or FOMO and the fear, uncertainty, and doubt or FUD. The most important way to do this is to educate yourself on this industry and on whatever token or coin you want to buy. If you don't really understand what's going on, you'll have a much harder time holding a token when it dips in price, even when it has long-term potential. And conversely, you'll have a hard time differentiating between the vast majority of projects that have no future from the few that have the potential to go 10 or even 100x from their current price. Education is key. The second best practice is the golden rule of investing. Don't invest more than you can afford to lose. This is especially true if you are new here. You don't want to be checking your portfolio all hours of the day and night, stressing about the price. The crypto industry is highly volatile and price swings of 10 to 15% in a day are common, and sometimes we see swings upwards of 40 to 50% in a single day. This leads me to my next point. Know your time horizon. I recommend having a minimum 5-year time horizon. Crypto is not a get-rich-quick scheme, and if you approach it that way, you're likely to be disappointed. Think about it like a long-term investment in the technology, not a place where you're going to turn a few $1,000s into millions in a short time. For the vast majority of people, the best strategy is to dollar cost average, or DCA. This means you choose a time frame, whether it's every day, every week, every month, etc. You buy small amounts on regular intervals and you hold it. This limits the effects of volatility and gives you a better average price for your investments, and it doesn't require complex technical analysis. And to maintain your sanity, avoid checking the price too often. If you can't handle seeing your portfolio down 30%, don't look at it or don't invest, and delete the app off of your phone that you're using to check if you really can't stop. Everyone who has invested in Bitcoin and held it for over 4 years has increased their portfolio by at least 10x, no matter what price they bought it at. Next point, don't buy crypto from anyone in the local community, not from eBay, not from Craigslist, or anywhere that isn't a globally reputable exchange. Only purchase crypto from reputable exchanges and bookmark the URLs of whichever exchanges you want to use. You can't trust the #1 Google search result because phishing websites are excellent at making fraudulent websites look legitimate, and they get ranked in Google. You can also go to websites like CoinGecko.com or CoinMarketCap.com, find the coin you're interested in, and follow the links to their website or social media sites, and just make sure you check the URL before you buy anything or input any sensitive information like passwords. Lastly, Don't day trade, just don't. There are loads of so-called experts who will show you how they've gotten massive gains this week by day trading, and if you follow them and pay a small price to get into their insider group, you too will learn the secrets of their success. These are scams, and they will eat your soul and leave you empty-handed. If you day trade, you are either among the top 5% of traders who will make money, or you're among the bottom 90% who lose money. Ask yourself honestly, do I have the edge that makes me better than 19 out of 20 people here? Unless you're experienced and extremely confident that you have the skills, the risk management, and tools to make winning trades more often than losing trades, just don't day trade at all. It is the fastest way to get totally wrecked. In this wild world of crypto, education, security, a clear mindset, and a predefined plan are the best ways to make money, avoid losing it, and maintain your sanity throughout the journey. And don't trust anyone online, even me. I am not responsible for your investments, only you are. Take what you'd like from this video, but don't let this be the end of your research. It is only the beginning. Now, I'm sure you have lots of questions, so hit me with them in the comments below or by emailing me at contact@defi-now.com. If you appreciate the knowledge I've shared, be sure to hit those like, subscribe, and bell buttons to help this channel grow. As always, thank you so much for watching, and I'll see you in Wednesday's video when we make an overview of MakerDAO, the decentralized central bank of DeFi. Until then, take care and stay educated.